Hello, good morning. You're watching Newsline. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, we begin with the biggest news, in fact, coming in at the top of this morning. It appears that Hindenburg 2.0 has come back to haunt Adani Group of companies. A series of allegations which are being leveled by the way of a report that was out and about yesterday by the Organized Crime and Corruption Reporting Project, a project which is funded by, and to put it out there as a disclaimer, George Soros, a man who's been in contention for a very long time. The allegations are serious. The allegations amount to a series of opaque structures based in Mauritius which have ties to the Adani Group of companies, investing in shares of Adani Group of companies. So essentially, Karthik, the allegation, of course, is that Adani Group brought their own shares and then sold them, making huge profits.
Not exactly, Shweta. Hi, good morning. Yes, of course, we've woken up to this, big news coming in from overseas. Now, OCCRP, which you rightly mentioned, is a George Soros funded project along with Rockefeller Brothers, who are equal funders when it comes to the reporting and the investigations done by OCCRP. Now, from my understanding and my reading of the report, Shweta, it seems that the OCCRP has been able to break through those opaque structures. These opaque structures were cited by SEBI in its initial investigation into the Adani Group Hindenburg saga as well, wherein they had hit these opaque walls, unable to penetrate through them to identify who are the final beneficiaries of those opaque structures.
Okay.
These opaque structures
so, just to break it down, what are these opaque structures?
These
opaque structures have invested in Adani Group companies.
Funds, international funds, but because of limited jurisprudence of SEBI outside of India's shores, it has not been able to arrive at these funds belong to whom. Who is the person at the top of the value chain making that money from whatever investments the opaque structures through these funds have made into Adani Group stocks. Bought and sold Adani shares, short sold them to make money. Now, this OCCRP, apparently from the report, has been able to break through that entire value chain and reach the head of the food chain and identify two individuals who, and we'll come to their names as well, who seem to have very direct linkages with the Adani Group, with the promoter group of Adani. The report alleges that these two gentlemen have served as directors at some Adani Group companies and have also been associated with firms which are run by Vinod Adani, Gautam Adani's brother. Now, from all of this, what we are really trying to understand right now is that, is there any insider trading, which seems like a high degree of probability right now, or did the promoter family directly benefit? We don't know at this stage, after having read snippets of that report this morning. We don't know whether the Adani Group, the promoters of Adani Group, the family of Gautam Adani, had directly invested in these opaque structure companies, and it is their money reinvested into the Adani Group companies, and they seem to be directly benefiting from it.
Okay, so going back to how we initially started this discussion, I think I still stand firm on what the allegations are, which is that these opaque structures brought and sold shares of Adani Group companies, and these opaque structures are directly linked to Adani family.
They are directly linked. They are not part of the family. These two people cited in the report. There is linkage. They have served as directors on the boards of certain Adani companies, and they have close associations with firms which are operated by Vinod Adani. These are firms independent of the Adani listed companies, right? So, has the Adani family, have the promoters directly benefited from that? We don't know yet, but there has been
allegation.
The allegation is that there have been email exchanges which suggest that there has been sharing of information between members working in the Adani Group of companies and these two individuals who run these overseas funds which have invested, bought and sold hundreds of millions of dollars, and that is the allegation really. Now, let's just go a little deeper into what this report alleges. So, hundreds of millions of dollars have been invested in Adani Group stocks through Mauritius-based funds, right? These are Mauritius-based funds. These opaque investment funds are run by partners of promoter family. They are partners of promoter family, not necessarily directly invested into by the promoter family, but these are partners of,
so
of the
friends
promoter
and family essentially.
Friends, not family, friends. Friends, associates, acquaintances, call it whatever. Then the report also cites that files from multiple tax havens and internal Adani Group emails have been audited, and OCCRP has access to those exchanges, and the allegations stem out of those documents through which the investigation has been led. And it has found 2 cases where mysterious investors bought and sold Adani stocks through offshore structures. Right. Now, who are these 2 people who have now finally been named? The top of the food chain of the opaque structures, which SEBI was thus far not able to penetrate. We have the names of these 2 gentlemen. They are called, one of them is Nasir Ali Shaban Ahil, and the other is a Chang Chung Ling. And they seem to be long-time associates and have ties to the Adani family. Now, these 2 men, like I mentioned, have served as directors, shareholders in group companies and firms associated with Gautam Adani's brother, Vinod Adani. He's the man we are talking about on the screen right now. These 2 have spent years, allegedly, buying and selling stock through offshore structures, which have obscured their involvement. And in the process, they've made considerable profits. Now, documents also show that the management in charge of investments have paid a Vinod Adani company to advise them. So, the funds that they operate and invest through have received have paid Vinod Adani's certain companies as advisors. So that is a very strong allegation coming. What is Adani saying in all this? I think it's important to put that out as well. Immediately after release of the report, we haven't got an official statement from Adani. But the OCCRP report suggests that when it had written to Adani before publishing the report, Adani Group has said that the allegations are baseless, the allegations are unsubstantiated, and the allegations have been rehashed from the Hindenburg allegations. Now, the Hindenburg allegations, just to refresh jog everybody's memory, came out on 24th of Jan this year, and there were allegations again of short selling and profiteering on the basis of short selling by certain investors. Opaque companies which have invested on behalf of the family short sold Adani shares to make money, and in the course of these last 7 odd months or so, we've seen the valuation of Adani Group companies tumble from a high of $238 billion down to about $100 billion at its low. Last few days, we've seen in a run-up to SEBI's report filing in the Supreme Court, and Supreme Court was due to hear the matter on the 29th of August, but it postponed it, deferred it, and we were hoping that a new date, a fresh date would be available soon. But before SEBI could submit its final report to the Supreme Court, and it had sought many extensions, the last one being 14th of August, and after that another 15 days of extension was asked for, and we were hoping that some final conclusion would come out of the SEBI report. But before SEBI could come out with its report, we have another blow coming the Adani Group way, by way this time of the George Soros and Rockefeller brothers funded OCCRP investigations.
All right, let's get Mohit Gang into this conversation. Mohit Gang, who's the CEO and founder of Money Front, joining us on the bulletin. Mohit, how significant are these allegations? What does it mean for Adani Group? Adani Group in total lost about $150 billion since Hindenburg report came out on 24th of January, recouped some of its losses. The market cap is still down by about $100 billion. All stocks opening in the red this morning.
Morning, Karthik and Shweta. Look, so honestly, it's very difficult to comment as to what will be the extent and magnitude of negative impact, or how the markets will now view this second report which has come on the Adani Group stocks. Honestly, I think look, it's very difficult to comment on these things because these are all allegations, and these are all based on few findings which a particular non-profit organization or a reporting agency has reported from outside. It's absolutely difficult to substantiate it sitting down here for me or for you, anyone, to pass a judgment on these things, right? So I'll try and refrain from that honestly, but per se on the group stocks, there's a lot been happening, which I think we have discussed over last few previous previous shows also, that the group has been trying to shore up its liquidity and trying to come out of its non-core businesses, so on and so forth. Now, will that hamper the group's plan to divest out of few non-core assets? Possibly, yes, right? If there are foreign investors, or if there are few investors who are wanting to pick up some stakes, maybe they will take a step back and wait and watch out for the situation to pan out. However, looking at the extent of negative impact on the stocks yesterday and today, it's not like a massive impact which happened when the Hindenburg 1 report came out, right? So stocks have reacted. Obviously, they will react to any kind of a negative news, and stocks which are always out there in public's eye will tend to react a little more sharper, right? But 2 to 1% negative impact doesn't kind of augur a meltdown in stocks, or doesn't kind of indicate that this is going to be a massive thing again. So to my mind, I think yes, it's good for an outside agency to come out and flash a report, but it's very difficult for us out here to substantiate sitting and pass a judgment on that. And I'll refrain from that.
Right. I understand why, why you would refrain from perhaps commenting further on it. We haven't been able to independently verify a lot of those claims made. Those are substantial allegations. But if at all found to be true, how significant are they? The allegation that Hindenburg made was that of stock price manipulation. It appears the new report by OCCRP is giving some fresh insight into how the stock prices may have been manipulated. Now, whether it's true or not, we don't know, but investors are spooked.
And honestly, Mohit, sorry, before you answer that, I'm looking at the latest, updates on stock prices coming in. Adani Enterprises is down about 4.7% already. We started the show with prices about 10 minutes prior to the show beginning. It was down about 2.5% or so. Adani Enterprises is down about almost 4.9% as we speak right now. Let's look at Adani Power. Adani Power is down about 5.19%. So overall, the mood of the investors obviously is very, very sullen right now.
And this is not just some profit booking that is happening on the back of stock prices going up in the past couple of days. This is clearly investors were spooked once again with a fresh set of insights that is coming in, Mohit.
Look, honestly, from a retail investor's perspective, I think it's better to just be on the sidelines and watch out the scenario. To be very honest, even for experts, it's very difficult to kind of assess what actually is the thing which is going on under the seats of various holding companies, so on and so forth. And most of these structures are offshore, so it's absolutely difficult for anyone to figure out the right intricacies of the entire thing, right? So for retail investors, I think they should just stay aside. They should let the entire thing calm down completely and get the valuations to be to come at a reasonable extent. Look, I comment on the merit of the stock, and I think from that perspective the valuations are still fairly high for few of the group entities. Few are looking attractive, and wherever there was merit, I think we've also seen some foreign funds or few other FIs picking up stake off late, right? But from a retail perspective, I think people should just wait out and be on the sidelines and not jump in just because there's a 3%, 4% or a 5% correction and try and bottom fish on these stocks. Honestly, I think it's just okay to leave few things aside.
Okay, Mohit, what does a 5% decline in morning trade tell us? I mean, markets have been open for what, just about under an hour or so right now. Yes. So what does it tell us? Is all the selling happening only by the retail investors? Do they have, even if many of them are large stakeholders, they are still in the minority, right? So does it show that it is only the retail investors who are spooked, or are we also looking at a situation that many of these institutional investors are possibly offloading their stake in Adani this morning?
Look, possible. Maybe there are some big sellers out there. Definitely possible, because the retail participation is not too high in Adani Group stocks, and even the DII, which is the domestic institutions like your mutual funds and insurance companies, hardly have any stake in the Adani Group stocks. If you go across the board and figure out, compared to what other few other large cap or Nifty 100 names are included in few of the fund house holdings, the Adani holdings are pretty limited, right? So yeah, I think it's fairly possible that some institutions are selling or something is happening which perhaps you and I both don't know, or maybe there is something which is coming as part 2 or part 3 of this report, or something more which is coming out in public eye, which perhaps we'll come to know by the end of the day or maybe tomorrow, right? So on all these things, I've always realized that these news flows come in peels. You keep peeling like an onion, and you keep going bottom down for a few days till you figure out that the final base has come and you've peeled a little over over the entire thing, and then you start coming up. So I'll let the situation die down and calm down before taking any further interest in these stocks.
All right, before we discuss your position, Mohit, on these stocks for future, let's break down what we know so far. So to start with, a couple of allegations that were made in Hindenburg. It appears that those allegations have been further made in this report, which is what Adani Group says, that this is in fact a copy-paste of what
a rehash, the exact word
is of what Hindenburg came out with. Now, as far as allegations and the investigation into these allegations is concerned, we know SEBI has been investigating. Now the job seems to have been made tougher or easier. I don't know. I mean, I don't know the right word to use, Karthik. But SEBI said that we have investigated 22 out of the 24 allegations made. 2 allegations we are still investigating because these were offshore companies, opaque structures, and we were hoping for some information from outside entities. It appears we now have more clarity on which these offshore structures are. At least 4 companies that have been named in that OCCRP report.
Yeah, so we know who these funds are, and I think SEBI also, to my understanding, would have been able to track down the funds. I don't know. I mean, I'm prejudging what the report to Supreme Court possibly would have revealed and what is already printed out for submission to the Supreme Court. But I believe it might not have been very difficult for SEBI to understand the entity which was making investments, which was buying and selling shares in Adani Group companies. What, to my mind, SEBI would have hit a wall against would have been to understand who owns these funds, because these funds would not typically disclose their ownership pattern. And even on the request or insistence of SEBI, SEBI would have very limited, if at all, any jurisdiction on a Mauritius-based fund. And Mauritius, as we know, has been a tax haven for certain reasons, and one of the reasons being that it takes privacy very seriously, and it takes it takes pride in saying that you can come and bank here. We are a tax haven. We are pretty much, a place where offshore entities operate from, because we keep your identity, completely confidential. And that was incidentally the case even with Switzerland in the banking space, many years ago. But with Mauritius, I think even with Mauritius, SEBI would have been able to identify the names of these funds, 4 funds which have been named in the OCCRP report. But SEBI would not have been able to my mind, penetrate into that entire food chain to understand who owns these funds, who funds these funds, and who eventually gets to keep the profits which these funds make. So that seems to have now come out clearly through the OCCRP report, that OCCRP has been able to understand who is sitting on top of these funds and has been able to draw these linkages with the Adani promoter family. And the allegations, again, coming for the benefit of our viewers right now, allegations coming that these 2 gentlemen, Nasir Ali and Chang Chung Ling, both have served as directors in Adani Group companies and have worked in close association with firms directly associated with Gautam Adani's brother Vinod Adani. And the report claims that it has got access to certain emails from the Adani Group, which it has been able to dig into and arrive at some of these conclusions.
Right, and establish a relationship between these funds and the Adani family.
That's right.
Per se. So substantiating some of those allegations that were made in Hindenburg, perhaps. Now, obviously, all of this is not substantiated at this point. So we put that disclaimer out once again for our viewers. All of this coming by the way of a report that was filed by OCCRP, the Organized Crime and Corruption Reporting Project, which has now revealed that perhaps offshore structures that were used to buy and sell Adani Group stocks have relations with the Adani Group. So going back to the way we started this, or how we started perhaps our show, is that Adani Group directly owning some of their publicly listed stocks.
Directly again.
Indirectly trading with
there is definitely a strong case building up to something which could border insider trading, if not exactly insider trading. Some exchange of emails, some exchange of information seems like a high probability right now, as per the report. Again, this is not my analysis, this is as per the report. If the report has been able to establish these links to the funds which have short sold Adani stocks, penetrated through their opaque structures to understand who's making money, establish a relationship between those who have directly made money with the promoters of the Adani family and Adani group companies, then there definitely seems to be some sort of a nexus or some sort of an insider trading, border insider trading, which could have led to gains for vested interests.
Okay. And before we move on from this story, Mohit, perhaps a last question to you, at least on the Adani story and on the latest that has come by the way of this report. What is your advice perhaps to the current retail investors who are directly invested in Adani Group stocks? What should they be doing?
Clearly stay away. Look, very clearly stay away. Look, there's no dearth of quality stocks out there. This market is doing absolutely fantastic. Every day you hear news of few companies selling stakes, block deals happening, promoters divesting, few news, new order books, this, that, right? So there is a lot of quality out there waiting for you to pick up at right prices. And I have a very clear rule on this one, that anything which is to do with an investigation which is under jurisprudence, and there are reports which are investigations which are undergoing with SEBI and the Supreme Court both, right? So it's too premature for anyone and or even for me to comment on these kind of things. I would rather advise all investors to just take a silent wait and watch, cautious approach on these stocks right now and move towards any other part of the market. Once everything settles out, once all the reports are out, once Supreme Court has or SEBI has investigated the matter completely, I think you can always go out and dabble in those stocks if you find some value.
And on your screens at this point in time, the latest as far as Adani Group stocks is concerned, some of these stocks down by about 3.5%,
4.75%
as far as Adani Enterprise is concerned, 4.46% Adani Enterprise, Adani Ports down by about 3%, Adani Power 4.83%, ACC down by 3.3%. That of course is the latest as far as Adani Group stocks is concerned. So all day perhaps, I think there's going to be substantial limelight on Adani Group stocks performance.
Absolutely, and we'll have to obviously keep tracking that story. Let's just see if we have the numbers of how broader markets are trading this morning as well. When we started the show, markets were up in the green, but yeah, there has been a little bit of beating that Nifty 50 has taken. Not sure if it's a direct repercussion of what we are seeing play out in Adani. Remember, I think Adani stocks which were part of the Nifty 50 had dropped off the Nifty 50 charts at some point. Mohit might be able to correct me there if I'm wrong, but Nifty 50 seems to have taken a little bit of beating. It started in the green, it's down, flattish down just about second decimal points in the red. Sensex, Nifty Bank, Nifty IT holding up well. Nifty IT started this morning up just about 0.6% or so. It's gained some momentum, up about 1.02% this morning. Mohit, is Nifty 50 taking the hit on its chin thanks to Adani, or there's something else at play?
Look, I don't think so. It's Adani alone, and I'm sure there are other stocks. Adani Enterprises is the only stock to my mind which is a part of Nifty 50. In fact, Nifty Next 50 has a few names from the Adani group, honestly. So I think it's more of the banking index being a little weak of late, and I think banks have or financials have almost 35% weight to Nifty 50. So that's, I think, playing very heavily on the market. Honestly, one big divergence which we are seeing in the market is Nifty IT versus Nifty Bank. I think that's a clear story which is panning out for last 2-3 odd months. If you see performance of Nifty Bank vis-a-vis the performance of Nifty IT, I think the divergence is massive. It's almost like 7 to 8%. Nifty Bank has been down almost 4-5% in last maybe 3 odd months or something, and Nifty IT in the similar time frame is up around 4-5%, right? So I think that's what is being playing, and that's the one heavy thing on Nifty 50 itself, because as I told, financials are almost 35% weighted, so which is a prime reason why Nifty has not been able to make its next move up.
Okay. And big headline likely to come today by way
by
of
the end of
GDP
the
numbers
day
as well. Mohit, what are street expectations on Q1 GDP growth?
Look, I think again, thereabouts 6.5% and thereabouts maybe 20 bips up and down is what perhaps a different kind of forecasts are coming in, right? And I think the economy on the bottom line has been doing fairly well. The EPS growth, which I can see, which companies are claiming, I think Nifty this year will clock almost 1,000 rupee EPS, and it's almost like a 10% growth on previous year, which I think is fairly healthy, right? So I think all of this is coming from the underlying economic current, and my sense is the GDP numbers should come extremely positive.
All right. GDP numbers, of course, expected later today. We'll try and get more details as and when we can. But the expectations positive, growth expected to be anywhere between 6.3 to 6.5%. But better, perhaps more robust than what perhaps could come by the way of Q2 growth, where the expectations are slightly lower. But Mohit, thanks very much for joining in this morning, for your insights. We'll try and get you back as soon as we can, but we'll shift focus here on this bulletin and move to PLI for IT hardwares and IT companies at large. It appears that there are now more takers, Karthik.
Yes, Shweta. And interestingly, Minister for IT, Mr. Ashwini Vaishnav, has said that the laptop import ban has got nothing to do with it.
Okay.
I take that with a pinch of salt, but anyway, that's the statement which has come out. Now, let's just understand, what is this PLI scheme for IT all about? Number one, overall, when the PLI scheme was introduced in its first phase, it had an outlay of 1.97 lakh crore rupees as incentive to manufacturers to come set up shop in India, domestic as well as international manufacturers, to make India a manufacturing hub. And one of the critical components when it comes to manufacturing has been this entire pack of electronics. We've seen some success when it comes to smartphone manufacturing. Smartphone manufacturing in India has reached a value of about $11 billion or so. And this is give or take about 10% of India's total manufacturing by volume, by value right now. India's total manufacturing, which sort of, went on the back of India pivoting from a service-only focus to a service-plus manufacturing focus, went in the right direction, and India was able to create manufactured output worth about $105 billion or so, right? So now, what is this PLI scheme for the IT sector? If you remember, India has been mostly an importer of laptops, tablets, PCs, servers, gaming equipment, headphones, the works, right? All the paraphernalia that goes in IT. India has mostly been only an importer. And these imports had at one point touched about $8.8 billion earlier this year. A bulk of that came from China. About $5 to $6 billion worth of imports on gadgets, computer gadgets, actually came from China. So India's stand on putting a blanket ban on import of laptops, tablets, PCs seemed as a political move to hem in China and at the same time give a fillip to international companies coming and making in India. And a great way to incentivize any sort of manufacturing is to give them a cash incentive, which comes by the way of the PLI or the production linked investment scheme.
And give them no other way to perhaps be able to import, so they will have to make in India.
No, so I mean, import licenses, the government says, will still be issued. So if you really must import, tell the government where you want to import from, which country you want to import from. It needs to be a trusted partner country that you are looking at importing from, and the government is going to issue a license to you, right? Takes you back to the 1980s license. Raj, I understand. I know I've also had those emotions. I can see on your face that you want to go there.
No,
but right now, let's stay to...
And not just that. I also want to, I think for the benefit of our viewers, there are 38 companies who are now showing interest.
That's right.
There's no company that showed interest prior to the import ban. There were no takers for PLI. If my memory serves me right, there were no takers for...
overall, I think PLI did not see the kind of offtake that it was purported to have seen.
Actually, at all.
and yeah, so look at auto sector also. The
Right.
news that we ran yesterday, there was a 26,000 crore rupee outlay out of the 1.97 lakh crores. 26,000 crores or 1/8 of the total outlay was towards manufacturing of automobiles. And all these schemes were initiated at a time when the global supply chain was in a mess, owing to China's zero COVID policy, overall the Russia-Ukraine war, prices of commodities going up, semiconductor shortage, all of that. So that is when the government had actually started this PLI scheme, that manufacture in India, make in India. The auto sector also did not see any offtake for an entire 1 year or so. And yesterday we reported that that scheme, the 26,000 PLI, 26,000 crore rupees PLI for auto sector has been given a 1-year extension. Now what the government did this time around with the laptop import ban, laptop, tablet, PC import ban, it gave a deadline to companies who want to sell in India to apply for the PLI scheme. And till 5:30 p.m. yesterday, there were 32 applicants. And between 4 hours from 5:30 p.m. to 9:30 p.m., the midnight of yesterday and today, 30th and 31st August being the deadline, between just those 4 hours, it shot up from 32 to 38 applicants. Now, who are these applicants? I think important to know. Pretty much every brand of laptop makers that we can think of, right? So, you've got HP, you've got Dell, you've got Lenovo, you've got Asus. You've also got now Foxconn Group to make IT hardware, perhaps not limited only to the fabs or to the semiconductors, right? So you've got pretty much any brand that you can think of which sells in India, laptops that we use at home in office, who are now applying to avail of this PLI scheme. Curiously, Apple is out of it.
Yes.
Right.
Which
so
is surprising.
Until 9:30 p.m., Apple was among the only big known brands which had not applied for the PLI scheme.
So would it therefore be right to assume that Apple is going to acquire that license and continue importing from outside?
I think that could be one conclusion. Another conclusion could be that Apple sees that the smartphone market is worth investing in India right now, and even the latest iPhone 15 is going to be manufactured in India, and it has vendors, partners, including the likes of Foxconn, Pegatron, etc., which do the contract manufacturing on its behalf.
Okay.
So Apple directly itself wanting to set up a manufacturing plant may not be its strategy of manufacturing at all.
Okay.
So it could still be done through third-party contract manufacturers, including Foxconn, which is part of the list, right? But Lenovo, Dell, HP Enterprises as well, which is the enterprise division of Hewlett-Packard, largely into servers and cloud infrastructure and offering B2B solutions rather than B2C solutions, has also applied for the license. Now, overall, through this scheme, again, according to IT Minister Ashwini Vaishnav and the PIB press release that came, 75,000 odd jobs are likely to be created with the 17,000 crore rupee incentive. These are direct jobs, factory workers directly employed in the manufacturing process of IT and electronics hardware. 3x of that is likely to be the indirect supply chain, value chain job creation. Now, one of the players which has already applied for the PLI scheme, called Dixon, has already set up its factory in Noida and is likely to employ about 20,000 odd people. So, of the 75,000 total employment to be generated through the manufacturing using the PLI incentives, 20,000 is straight away in Noida, the city where we are sitting right now, by the way, proudly at this moment. 20,000 would be directly employed at the Dixon plant in Noida. And overall, the scheme, the output of the scheme, the manufactured products are likely to start rolling out of factories as early as mid-2024. And perhaps the out date of the first batches from each of these factories is 2025. So, starting mid-next year and give or take another 18 months from then, we'll see each of these 38 factories which are granted the PLI would be up and running and would actually be producing and manufacturing and sending out from their supply chain the manufactured laptops.
All right. And obviously there will be a localization clause, which means many of these companies will have to source material from within India, 50%?
And thereby hangs the tail, Shweta. Yeah, so I think it starts slow. It starts at
Going
about
back to
20%.
a discussion we had yesterday, which is with regards to quality. I think quality of IT hardware is paramount, not just for the country, for consumers at large. I hope that will not be compromised.
Well, I think the final buck stops at the manufacturers themselves. And it is fair to assume and fair to suggest that they will have to ensure that their quality is completely at par with whatever they produce and manufacture globally. And if they are able to keep up with those global standards of manufacturing, then they will obviously be able to sell in India. And that is how they're going to build their market here in India.
All right, and obviously 38 companies now looking to take up the incentive scheme by the way of PLI, and these are all IT hardware companies. You can see them setting shop in India very, very soon. Let's move on. And Jan-Jun, in fact, joining us here in the studio. And a story that we are tracking that is by the way of India's rice export. Now, India had banned export of rice to ensure that there is adequate supply of rice within the country. Prices of rice continue to be stable, but it's making an exception, and it's making an exception for those countries perhaps with which it has special ties.
It's a two-way thing. 150,000 tons of rice is stuck at the ports, and it's been stuck for 2 months. So exporters who have paid duty, export duty, which is 20%, by the 20th of July are allowed to export it to where this rice was to go, specifically to 3 countries, Bhutan, Mauritius, and 50,000 tons of that, of course, is going to Singapore, with whom India has. All of these countries we have special ties. So it is a part, and it's non-basmati.
Okay.
Non-basmati.
Non-basmati.
Basmati
Absolutely.
was allowed.
Right.
So the special ties is of course there, and Singapore was a major importer. Their demand was met mostly by what they got from India. So it's the rice that was stuck. It was not that this rice was being sold in the Indian markets. It was stuck at the ports, and that's being offloaded to these countries.
So Shweta, there's a total of about 1.43 lakh tons, and this is a special case exception that the government of India has made. So you rightly said that up until 20th of July, the challenge that India was facing was high inflation, and that high inflation coming of course through high demand and a shortage in supply. So to curb that shortage of supply by way of exports, the government decided to first put a ban on export of non-basmati rice. Thereon, earlier this month, we also saw that even the basmati rice exports had been halted. Now, the government has opened this as a special case, the export of non-basmati white rice only as a special case, because there is a food security challenge brewing in these 3 countries. And these 3 countries, like Amit had mentioned, are Bhutan, our neighbor, one of the few neighbors that we have a good relationship with, and we want to continue sort of, fostering that good relationship given its proximity both to China and India. So there is Bhutan, then there is Singapore, and which is the 3rd country you mentioned, and Mauritius, of course. So Mauritius, well, opaque, non-opaque structures notwithstanding, Mauritius is the 3rd country that India has opened its supply to. And of course, I think in varied measures, 79,000 tons, 14,000 tons and 50,000 tons respectively to the 3 countries. And just as a special case, as an exception, these exports have now been permitted, and these exports have opened up because there is a food security challenge that these friendly to India countries are facing right now.
Right.
And then of course there's been an LPG price reduction, and inflation pressures will partly be taken up with that price cut. So I think India is a little more malleable right now to send some rice out.
Some of the rice out to other countries. Remember, India is the 2nd largest exporter of rice in the world. So after that export ban kicked in, we saw a lot of Indians, NRIs, holding up rice. There were visuals, pictures, and bites of many of these Indians living abroad who were fearing that there's going to be an acute rice shortage after India halted the export. But that hasn't really happened so far. We don't know
of
of
the numbers, Shweta, but there was tremendous pressure on India from multiple quarters across the world to actually lift that ban. And even for the laptop import ban, there was pressure from the US for India to lift it.
Absolutely.
So I think India is trying hard right now to take a very tough stand in the interest of its own domestic challenges in a year to a run-up to the national elections. I think India is taking a few very, very tough decisions right now, and trying as far as possible to stick by those decisions and making exceptions in very, very few instances. So let's
These
see
are
how
the
it pans
exceptions
out.
to begin with.
No, I think another exception that came in the news recently, but then we couldn't sort of verify that independently. In fact, I had myself asked Industry Minister Piyush Goyal when I had met him at a social function a few days back about Tesla's entry plans in India. And just like all ministers in the ruling party right now, BJP, evade such questions. Even he did fairly successfully, and he said, I will not be able to give you an exclusive soundbite on this, etc. Right. But what we read later on was that India could make an exception for Tesla
Okay.
and may not subject Tesla to the same custom duties, excise duties, import duties as the rest of the automakers. So I think India is setting some stringent rules across the board, whether it is making in India, manufacturing in India, export bans, import bans, cutting off essential items prices. We've seen that with onions, we've seen that with tomatoes, we've seen that across the board, in fact, the last 2-3 months, right? Pulses, etc. So last year we saw it with wheat. So,
Right.
so we are trying to make these very, very tough, stringent policies in our national interest,
Right.
and making some very few calculated exceptions.
If I may say, and in my very limited career, this is the most protectionist we've ever been. I mean, I'm sure you can weigh in more of the last 20 years of your career, Karthik. If you've ever been this protectionist when it comes to export ban, import curbs, etc., all of that, of course, pointing to perhaps a government that is sticking its neck out and ensuring that people and the country stand to benefit over perhaps trade agreements that we have signed, over pressures from foreign governments.
So Shweta, how I see it, I agree. I mean, there is protectionism, and India right now is perhaps, among the very few globalized large economies which are implementing such protectionism. But we've got to see a clear departure from where we were pre-1991 when India opened up and liberalized its economy to where we are 32 years later in 2023. Back in 1991, corruption was high.
Right.
We did not have the expertise, the skilled manpower, the investments, the financial muscle to really be able to make our own products and services and cater to our own demand. So we had a balance of payment crisis, and there was no other option then for India but to open up its economy, because you needed that foreign investment coming into the country. You needed international brands, international products making their way into India. 32 years later, I think we have reached a level where we can be a little more assured about our own capabilities of building products that we need, that products that we consume, and have a little more say in the global sort of, geo-economic, geopolitical landscape, where we are able to take a decision in our national interest and defend it. And
so priorities have changed.
I think
but it's
capabilities have
and
changed.
capabilities have changed. It's taken some years to arrive at where we
because
are at the
whatever was
moment.
done in 1991 was also in the best interest of India's growth, India's economic independence.
The
What is being
challenges
done
were
right
different.
now, challenges were different,
Absolutely.
environment was different. What is being done right now is also seemingly in the best national interest possible. So if we can actually have manufacturing set up in India, we can have companies coming, making in India, and really China plus one becoming a China plus India, and over time India minus China. I think we are paving a very, very solid fundamental road towards our own growth.
All right, and since we continue to discuss challenges, we should also be discussing a major challenge that a lot of people perhaps face in India, and that is by the way of real estate prices. A story that we are tracking by the way of rising housing prices. In the first quarter of this year, we're given to understand housing prices or prices of real estate have risen in as many as 43 cities.
Yeah. The constant rise in prices of housing quarter to quarter has been going on for the last 2 years consistently. This time, the maximum increase is not in Delhi and not in Bombay, the biggest two metros. Rather, Bombay is way down the list, it's only 2.9%. Ahmedabad and Bangalore are leading the race. The most, and pardon my using the word, curious one is Kolkata, which is third, which is has seen a 7% increase, and followed by Pune, which is 6%.
Okay.
So these are the four cities leading, and there's been a 4.3% annual rise in real estate prices across India in the 50 city index, where 43 cities have seen a consistent rise in prices.
All right, a consistent rise in prices and the cities that you would not expect otherwise. Ahmedabad, Bangalore, you'd still expect.
What you don't expect is Kolkata.
Oh, you don't expect is Kolkata. I mean, clearly hinting at the fact that
people are going there.
People are going to Kolkata. Housing prices, of course, continue to rise in Kolkata. And before we go, I think perhaps a story which is important to touch on briefly is with respect to number of tourists coming into India, because that is also bringing joys. Government has made sustained efforts to bring in more foreign tourists into India, and the first half of this year has panned out well.
Yeah, 106% rise in the tourist traffic. Domestic traffic has gone up consistently. There's been a big rise in foreign exchange earning due to tourism also. The surprising or maybe not so surprising thing is the cultural centers which are seeing the big chunk of these tourists going to, whether it's the Kashi corridor, whether it is Taj Mahal. These are the places that the cultural centers. Taj Mahal was always
right.
These are the centers that these tourists are going to. So yeah, it's a big up.
It's interesting. Kashi Vishwanath
yes,
corridor, in fact,
that's
is becoming a major tourist destination, not just for domestic tourists,
for international
but
ones.
also for international tourists. And,
yeah.
and that is important to point out, because Prime Minister himself had inaugurated the first part of Kashi Vishwanath corridor, the Kashi Vishwanath Dam in Dham, in fact, sorry, not Dam, Dham, as we call it.
Being one of the oldest cities in the world, along with Damascus, it was always attractive, but the foreign tourists had this thing that it was not clean. Probably that has been taken care of, and probably that's why now the tourists are going there.
All right. So apart from Jammu and Kashmir, the Kashi Vishwanath Dham, in fact, attracting a lot of tourists at this point in time, continues to be a major attraction for not just domestic tourists, but also people coming and jetting off to India in search for more perhaps spirituality, leisure time, we don't know, but good news there as far as first half of this year is concerned. But with that, it's a wrap on this bulletin. Thanks very much for watching.
Holding of cricket rights has the ability to make a sports broadcaster's business bigger.
Always been hotly contested rights.
The broadcasters who are paying